As we told you earlier, strong earnings from teen retailer Abercrombie and Fitch, but the company expects continued erosion in gross margins. The stock is up more than 20% this year. Right now, it is trading lower by 6% now. But get this, Abercrombie says it will pay cast members, including Michael, the Situation Sorrentino of MTV's Jersey Shore, not to wear its brand on the air. A company spokesman says, quote, "We are deeply concerned that Mr. Sorrentino's association with our brand could cause significant damage to our image." I don't know, he's tacky, but he's ripped. Maybe it cuts both ways. Anyway, let's talk more about Abercrombie and the retailers. Joining us now is Stacey Widlitz, independent retail analyst and a CNBC contributor. And on the phone, we have Patrick McKeever, senior equity analyst at MKM Partners. He is just off the Target conference call. Patrick, let me ask you about that. What did you think of the Target conference call? You just bounced off there. What does it tell you about the consumer overall?
Hi, Melissa. Well, I mean, it went well. I think that management was more upbeat than they were 3 months ago. They had a strong earnings number, beat the street. They had a 3.9% increase in same-store sales in the second quarter. That's the best they've done since the second quarter of 2007. Their discretionary merchandise is picking up some steam, including apparel and home. So, I mean, I think Target's consumer is in pretty good shape. By comparison, Walmart yesterday, as everyone knows, reported a 1%-ish drop in same-store sales for the first quarter, and part of that is that their consumer is under a lot of pressure. There's a real difference between these two customer bases.
Where can this stock go while you're on the topic here? How much higher from the low 50s where it is now, Patrick?
Sure. Well, I have a mid-$60 price target. I have a $63 price target, and I think that's conservative. So I think there's some decent upside potential.
Is that a 12-month target? On target?
On target. Yep.
Right. Okay.
Stacey, let me ask you about Abercrombie, because turning back to that stock, it's getting hammered on this call about their margins. Are you worried about their margins?
Sure. Well, actually, they had a really strong quarter.
Yeah.
But the problem is that they just didn't really give us a lot of information about the second half of the year. So we know that input costs are going up double digits in the second half of the year. They didn't want to comment on pricing. They didn't really want to elaborate on expectations for gross margin. They actually wanted to talk more about Mike, the Situation, I think, than actually what the second half of the year looks like. So I think that's what's pressuring the stock. But if you look at the second quarter results, actually, their gross margins were not as bad as expected. So I think the key here in the second half of the year is you want to play retailers that have pricing power. I think Abercrombie does have pricing power. But again, investors do not like the unknown right now.
But Stacey, if you're saying they're getting hammered because of their tone on the call, maybe they just did a bad call and it's a buying opportunity. Is that possible?
I mean, I would tend to agree. I think, again, they didn't share anything with us. So investors really, they want to hear something. Target just told us the month of August is a little bit below June and July, but still within their expectations. We want to hear what's happening in the current environment since the market's so volatile, and they just didn't give us anything to work with. So I really think that's why the stock is getting hit.
And you've liked this stock for a long time, Stacey. It's been one of your picks, right? Quickly?
Yes, I do like Abercrombie. Again, I think they have the international expansion, and if you want to look at pricing power in the second half of the year, that's one of the names to look at.
Patrick, let me turn back to you and ask about two factors in the broader economy. Number one is falling interest rates and the possibility that people are going to refinance their mortgages and actually get some cash in their pockets. The other is falling gas prices. How much, if at all, does this help retail generally and a company like Target specifically?
Well, certainly both are positive. I think that the second thing, the falling gas prices, is probably the bigger positive because consumer psychology is so fragile right now, and consumers are responding very quickly to prices at the pump by reducing or increasing spending at retail. So when we got a little bit of a reprieve back in May and June from the skyrocketing gas prices that we saw in the spring, retail benefited, especially the concept that cater more to lower income consumers who are more sensitive to gas prices. So I think we'll get a little bit of a benefit here as well, especially for those retailers, the discounters by and large, as we go into the back to school season.
Okay,
Patrick,
go get back on that call. Thanks to both of you for joining us. We appreciate it.
Thank you.